Hello and welcome everyone to today's commodity report for the 18th of October 2018, presented by myself, Phil Carr, at the Gold and Silver Club. On Wednesday we had the minutes of the FOMC statement and we've seen some strength there into the close, with the dollar breaking out to 1 week highs after the minutes from the Federal Reserve affirmed expectations that the US Central Bank is likely to continue raising interest rates, and this has provided further support to the US dollar and has also put pressure on a number of commodities, one of those being crude oil. So oil prices on Wednesday broke back below $70 per barrel. That's the first time in a month after the US crude oil stockpiles rose by 6.5 million barrels, which is almost triple what analysts had forecast. In fact, this week US oil is down 3%, and so far this month it is down 5%, and that of course follows on from crude oil prices in September breaking out to 4-year highs. Now of course the recent pullback that we've seen in US crude oil in particular has partially been a result of crude oil stockpiles, which have risen for the fourth straight week. So with that, we'll move over to the charts and we'll talk you through the levels that we are looking at next. First of all, if we have a look at US crude oil into the close on Wednesday, trading just above $70 per barrel. I'm now interested to see whether we do see a retracement over the course of this week, taking the price back towards the upper end of the range now as well. So if we have a look at the price structure at the moment on WTI, we've essentially come right back down towards the lower end of the channel with this sell-off that we've seen here after Wednesday's oil inventories data. So we have a look at the overall price action at the moment. We're still moving between this channel, and we're still moving so far this week within approximately about a $3 range at the moment. So you can see the lows here which were breached on Wednesday, where we've broken down to approximately $69.40 per barrel, and the peak so far this week has been $72.67 per barrel. I'm interested to see whether this zone of approximately $70 per barrel, whether oil does hold at this level over the course of this week. We do have the beginnings of a buy signal developing at this zone. It was also a previous level of very important resistance here over the course of the summer months. We found $70 per barrel a number of times providing resistance, and also other times providing support here as well. So we come back down to a very key psychological zone as well. So $70 per barrel, where the price is holding at the moment into the close on Wednesday. What I would be looking out for is the potential to bounce off this zone. Now the monthly pivot resides below at approximately $69 per barrel. That is what I would look at is really the peak in terms of a sell-off here. If we were to get a bit more downside, that's the level I would look at here for oil to start to turn around. But it might actually be that we hold at $70 per barrel. We've bounced already off approximately $69.40 on Wednesday, and we start to retrace back within this channel. That's not to say that we're going to full-on break out and make a move all the way back up to the recent highs, but certainly we could continue to move within this range. So it wouldn't be a huge surprise here to see, certainly between now and the end of the week, a revisit back towards 71 and possibly $72 per barrel here between now and Friday, if we just continue to consolidate between this range. If we do roll over a bit further, I would be looking at $69 per barrel, but I would look at that as potentially the most extreme level that oil would likely get to over the course of this week. Then looking at retracements which could take the price back towards the upper end of the range, or we may just consolidate and back and fill here a little bit over the next few days here. But certainly there are still opportunities to trade in this range, and I would look out for the potential for a bounce and retracement back above $70 per barrel here. It's quite an important level of support here for WTI crude oil. We'll move over to the dollar index as well. So this is the dollar following on from the minutes of the FOMC statement on Wednesday, and you can see quite a significant breakout that we've seen here, which is putting pressure on a number of FX crosses today as well, including the commodity currencies such as Australian dollar, US dollar, the New Zealand dollar, US dollar, but certainly the euro is under some pressure here as well. So the US dollar has had a fairly sizable breakout on Wednesday into the close. It's actually broken above this bull flag formation, and we certainly look like we've got the potential for a bit more continuation here, taking the price back towards approximately 95.60 here. If we get a bit more follow through for the US dollar, we actually have a buy signal on the US dollar at the moment. With the US dollar breaking out like this, gold has actually held up fairly well here, and gold of course broke out last week. It was the biggest one-day move that we'd seen with gold in over 2 years. This breakout that we saw last week, taking the price back towards $1,226. At the moment, gold is consolidating. It's consolidating onto most of the gains. I do still see quite a lot of support, which resides between 1,217 up to approximately $1,220 per ounce here for gold. gold, and we're still consolidating at that lower range at the moment. We've been back in filling a bit this week. At the peak so far this week, we've broken out to 1,233 US dollars. If we do hold 1,215 to 1,220 level and we manage to springboard higher later on in the week, I'd still be looking for the potential to revisit the weekly highs, and then the next level of major resistance there resides at approximately $1,240. If gold can hold these gains, so it really needs to hold above the 1,215 zone. If it holds and just consolidates over the next few days, and in fact so far this week it hasn't really pulled back any lower than $1,220. That's been quite a key level of support, and even with the dollar breaking out significantly following on from the minutes of the FOMC statement, gold is still holding up relatively well here. So that means any weakness again in the dollar, if we were to see a pullback later on in the week or some profit taking, we could see gold certainly springboard higher. And overall, gold is just getting very well supported at the moment, but it is at the upper Keltner channels here. It is at a zone where you often do see profit taking, and we may just continue to consolidate within a fairly tight range this week. But of course, there are some great opportunities to be had just trading within that range as well. Now, of course, if you'd like to get access to the exact trades that we're taking at the Gold and Silver Club and join a community of successful traders, there is an opportunity for you to do so. If you would like to join our private members live trading room service, you get access to the following. You have live trade alerts. Those are delivered via WhatsApp, email and SMS. You have access to mentorship, expert advice, in-depth market analysis and trusted insights, so you can know earlier how to act quicker and maximize your return on every trade opportunity. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will get in touch with you ASAP. And also make sure you subscribe to our YouTube channel. That way you'll be kept updated with the latest commodity reports.